Hello, it's Mr. Intermarket Analysis again. I'm just going to cover the German DAX today, just some weekend analysis, see where this DAX is headed, this juggernaut. Okay, even though recently the economic data has been not spectacular, shall we say. Obviously the IFO expectations, German growth downgraded. Overall, even with the inflation slightly ticking up in Germany as well, which obviously indicates high interest rates, etc. Overall, the economic data doesn't justify the move higher, but as we all know, recently the markets have been short squeezing higher based on expectations of more Kool-Aid, more QE. Obviously, if the Yanks keep manipulating the stock markets to all-time highs, with the Nasdaq moving higher, given that the correlation, positive correlation between the Nasdaq, the semiconductors, and the DAX, because they all are in the technology field, the innovation field, etc. So obviously they tend to cater for more disposable income as opposed to the rest, so they're very sensitive to that. So if you have stimulus measures, QE, etc., this will keep propelling higher regardless of the bearish economic data that's out there. Okay, let's start with the week. Oh, that's a daily chart that we have at the moment. Let's start with the weekly. Weekly, obviously, we all know, broken out of all historical resistance. This is on some sort of, let's just say, Apollo 13 mission higher. Okay, so nobody can argue there's a bearish scenario there on the weekly charts. It's just higher highs and higher lows, and we just have to respect it for what it is. Okay, and that's price action. Now, if you go back to our daily chart, yes, we do have a upper channel resistance based on the bullish channel that's going higher. Upper channel resistance. We have a bullish channel here at the moment that's keeping the markets obviously trading within. We do have an unfilled gap below, which is quite vulnerable. Obviously, as we all know, all gaps are vulnerable to being closed at the 8720 level, but again at the moment we have broken above the 9000 level. We failed to close above it, so slight warning sign there. Obviously the doji the day before as well, but again we have to take it in context of the market. The fact that Nasdaq made a multi-year high, although it did come off the high as well at 3400. Again, we'll just take each day as it comes, but given the fact that we've got a bullish channel, given the fact that Shanghai has broken the bullish channel to the downside, again, that's a warning shot. That just generally indicate or give a leading indicator as to what's going to happen with the rest of the indices around the world. But again, we take it for what it is. At present, there is some turbulence or some resistance around this zone. Now let's go to our smaller time frames. Let's see if we can get a better view on our smaller time frames. So if we go to our German DAX, okay, so this is a 10-minute chart of German DAX. As you can see for the zoom out here, you've got a upward sloping contracting wedge pattern. Again, that's generally speaking, it's a bearish sign. Okay, if we just slightly zoom in again, we had a H&S formation play out. Okay, we didn't actually hit the actual target, so again that's open to target. We are retesting the neckline of this H&S formation. Okay, we do have a bearish channel that we're being obedient to at the moment. Okay, with lower lows, lower highs, given the fact that we started to trade lower as soon as we penetrated and spiked above the 9000 level on a Friday. Well, obviously we knocked out a few stops above and then we reversed ever since, so the appetite to buy above 9000 isn't there on the DAX at present, especially given the fact that the economic data is weak. Obviously the flush that we had in China, Shanghai and Nikkei absolutely obliterated overnight. Okay, the Aussie market, of the Aussie USD hammered as well. Yen pairs under severe pressure, adding the fact that commodities were under pressure as well. So it was a miracle, the fact that we didn't actually hit the target on the H&S, and obviously we've got a gap below on the 10-minute chart around the 8920 level that needs to be closed. Okay, we did have a H&S formation here, as you can see. Obviously the neckline was a spike here. We see topping tail, left shoulder here, right shoulder here, and again we failed to close the gap below at 8920. So the invisible hand of Mr. Bernanke and Yellen is quite strong here, obviously propelling and keeping markets higher, even given the fact that all global markets or all global warning signs are there for the market to capitulate and move lower. But given the fact that it's a Friday, a lot of manipulation occurs on a Friday because the Yanks want to keep their citizens happy and keep them spending obviously over the weekend. So the last thing they want is to open a paper up stating that the stock market has closed down on a Friday. So again, that's the theory behind the obviously Friday manipulation. But again, let's just let's not focus on too much manipulation. Let's focus on price action and try and forecast the market for what it's trying to tell us, rather than us impressing our opinions on the market. So 10 minute at present, obviously HNS formation here. We're retesting the neckline. We've got a downward sloping or bearish channel, shall we say. Okay, we do have a larger context of things. We do have a HNS here, so this is the head. We're creating a right shoulder at the moment, and this is a small left shoulder there. Obviously propelling lower. Ideally, I do expect this 8920 gap to be closed next week. If not, the 8950 to be tagged as well. Again, that depends on the Nasdaq. If they keep inflating the Nasdaq higher, then obviously the DAX has to follow as well, because the Kool-Aid moves in one motion. So it's all about the easy trade out there. Okay, let's have a look at the 60-minute chart now. Let's just try and focus on that. Okay, so obviously we've got this bullish channel here. Market's obviously being obedient to it so far. We've got a gap that needs to be filled at the 8730 level, and we obviously also have the gap that I just mentioned before around the 8920 level. Okay, now we do have a contracting wedge pattern here. Obviously a symmetrical wedge, contracting wedge, call it what you like. The fact that the market is failing to really penetrate and make new sustained highs on the DAX is a worrying sign. Okay, so that's something that should be watched very closely, especially given the fact that you've got a HNS formation at 10 minutes. And also, if you look at my FTSE video previously as well, you can see that the FTSE is at some turbulence around the 8730 level. And given the fact that intermarket analysis states that all markets move in tandem, the fact that the Shanghai has broken its bullish channel to the downside, the fact that the FTSE is at horizontal resistance, okay, and also has its own HNS formation in 10 minutes. Okay, so again, the DAX is moving in that sort of line as well. The fact that it's sort of showing an exhaustion here, with it failing to make sustained new highs and creating topping patterns or topping tails. So you can see a topping tail there, a topping tail there, and a topping tail there. So all exhaustive signs of a sustained move higher. Given the fact that you've got unfilled gaps below, we do need to close those as well. So taking all that into context, just be very careful. As soon as this bullish channel breaks here, we could get quite a sustained move lower. And again, like I said, Asian markets are leading that move lower at present and being leading indicators. So again, I'll wrap it up there, folks. Always remember my motto: risk on, risk off, wax on, wax off. Learn and identify when the markets change bias. That is the holy grail to day trading. Take care. Goodbye now.